Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday, February 17th. Woohoo! TGIF, everybody. I hope you guys have a wonderful upcoming weekend here. And we do got some important economic news releases to go over here this morning. So we'll jump right into starting off with the consumer price index, and this is the or CPI. This is basically the part of the inflationary numbers for the consumer level. This Fed does look at this pretty heavily. And so back in December, we had 0%, so there was no growth. We figured it'll kind of project a little bit of growth, a little bit of inflation for January. Things go up a little bit, and it went up 0.2%. So not as high as they thought it would. But when you strip out the food and energy, which creates the volatility in that, we have the core CPI here. And back in December with the core, we had 0.1%, and we expected to go up a little bit, 0.2%, and we came into what we forecasted. So inflation numbers right now are very tame, so we don't have any issue when it comes to inflation. As we mentioned, a little bit of inflation. Usually the Fed likes to keep it around 2%. Growth, which everybody likes to see, their pocketbooks, money coming in, growing each year. Items kind of go up a little bit every year. But anything too much of that is not good for the economy. It's not too good. So we just kind of try to keep it in a modest growth standard here. The next item here note is the leading indicators. This helps us to forecast as to where the economy is going. And last December we had a 0.5% indicator. We figured it would be about, again, another 0.5%. And basically came up at 0.4%. So January was a little bit slower this time around versus December, but still in a decent pattern here. We'll kind of watch numbers, see if it continues in this level or if it shrinks or grows. So February will be kind of important to look at in this indicator, see where things are moving. So let's jump over to the headline news here, see what we got. And right now the stock markets are mixed. Dow is down, whereas these Nasdaq and the S&P 500 were up. Investors are still Greece is still kind of heavily weighing on investors. They're still watching it. It's kind of the scenario, if it's going to get the economic boost that they're going to need come March. So this is going to be weighing heavily on their minds. So this is still something to watch out for. And then also another item to note, again, the media really hasn't touched on this, but the oil now is over $1.03 or 103 per barrel now. So obviously expect oil prices to go, or gasoline prices to go up in the near future. I guess just in time probably for summertime. So now we'll go ahead and jump over to the interest rates, see what the bond market's doing. As we saw yesterday, wasn't such a great day. As you saw the long candlestick going down, which is the red going down. We started a new area. We broke below the floor yesterday, and now we're testing the new floor. And today with the green, we're up about 3 basis points. But as you notice, we had two opening gaps over. Yesterday had an opening gap to the worst, as well as today we had an opening gap to the worst. So at some point, I think we will probably close those gaps. So I think we may have a short term at least. I don't know about long term, but at least short term we'll close those gaps and then could go down again. So we'll kind of see where things go at. But right now rates are higher today versus what they were yesterday. All right, folks. So you guys have a wonderful weekend. If you're on Mike's Daily Market Report, please subscribe. If you're not, if you're seeing this from another site, stop on by, check it out, and subscribe. Get your free updates. Have a wonderful weekend. See you on Monday.